Welcome. I'm extremely excited to go over this price action because I got my ass beat this week. Now, let's just go over the economic calendar real quick. Monday, no news. Tuesday, no news. Wednesday, no news either because FOMC meeting minutes usually does not indicate a lot of volatility. Then Thursday, I stayed out London session because I really don't like this news. And then this session was good to trade. And then Friday was also iffy. And let me go open up my chart. I went through this price action, and you guys know I only want to trade pro trend. Now, in my opinion, what is the last range? So, when I come to my chart, so if I were to long, where would I long from this week? It would be either this fair value gap right here, this fair value gap right here, or in deep discount in the H4 range if our correlating asset is also indicating that we are going up or that we are in discount, or for example premium in the XY. So you guys see my range, this equilibrium. I'm gonna keep it on my chart. Now if we want to be a seller of this asset, we want to sell in premium, targeting discount, right? But this week was hard. Let me just be honest, this week was hard. So Friday we tap into a daily fair value gap and we leave a extremely long wick indicating the price got pushed up, which we can also see on the time frame below. So if you expected this, bro, there's so much drawings going on. Let me just hide this. Just redraw it. So this is a breaker pattern. Why? Because we have a high, low, higher, lower, low. So this right here is a breaker pattern right here, which we closed under, had a reaction on this day. And I went over it on the last weekly review. And then we go down, place through here. So this is a new breaker. So this trade right here that I had marked out, it is low probability. Why? Because we are in between PDRAs and the higher time frame holds more weight than the lower time frame. So if we have a H1 breaker pattern coming off of a daily discount, which was a daily fair value gap, and from an H4 discount, then obviously you would want to long this breaker. Now what happened? Price disrespected it on Monday. So Monday already indicated to you that this breaker is low probability. Now, I was low-key blindsided by this because this breaker right here, this was just a liquidity run to then displace back down. Now let me delete these drawings and let me open up the other drawings again. Let me delete this. So when we tap into that breaker on Monday, we also have a unicorn pattern and it played out the T2 discount of the range. Now, would I have taken this in live market? Definitely not. So I don't care. But then on New York session, so what I do every week, and oh my god, our cat is peed in the house. Oh my god, my family's going crazy. Alright, so I'm my bad, y'all. That's funny. So right here we have another unicorn. But this unicorn doesn't mean anything. Why? Because we don't have institutional sponsorship, we don't have fair value gaps coming to the upside. And other than that, if we respect this H1 breaker right here, we displace down from it, while also creating another breaker. So why would this be another breaker? So high, low, higher, low, low. So this will be a new breaker. Now let me remove this fluff. I don't want to remove this fluff because I still need to journal it. So this now is a new breaker. So if you would look long from discount right here, from this fair value gap, first of all, this breaker right here should hold price up. This breaker did not hold price up, and that's how you know institutional. Wait, let me go to the cat before they get mad at him. We're back. Okay, I'm back. Excuse me if my voice sounds a bit crazy because I'm a bit ill. I'm not ill actually, just a runny nose. I don't get LG. I'm the man. So Tuesday, no news. Monday, no news. We react off this breaker, then we create another break pattern. Why? Because high, low, higher, high. So this is a break pattern. Then we get a low, higher, high, lower, low. So this right here is a breaker pattern. We have a reaction right here. And now I'm gonna... this is annoying. So I taught you all about ranges, right? So your range should be candle closures. This is a new H1 range. And I'm going to put this big line as H1 equilibrium. So this right here is H1 equilibrium. Then we come back, we sweep. Oops. We sweep the previous session liquidity as fuel in premium of the H1 range to continue down at a key time. Okay, so this is H1 equilibrium. This was the breaker pattern. Let me see if we close above it. Okay, we also closed above the breaker pattern, so it would be like iffy. Like this, all this price action is iffy. I'm just showing potential trades because if you want to interpret the price how you want it, like you could also say like there's a breaker pattern to the upside. We want to see institutional sponsorship right here from this breaker. But obviously we did not get any institutional sponsorship right there during the key times. When I say study times, like the high of today happens around 3 a.m. Like coincidence, right? And we have SMT with DXY and Euro futures. So, oh, excuse me, that's the day after. So we tap back into premium. We have a sweep. Oh, wait, I'm tweaking out. I thought that was London session for some reason. We take a step back. Why? Because we touched discount right here. We sweep the session liquidity. And we left the M15 breaker pattern right here with displacements. So once London session starts, some people will be like, okay, we finally have a change in order flow. So I'm expecting price to finally make its way to this high right here. But okay, we have price back in it, right? But do we have time back in it? You need to ask yourself that, because that's also a key important factor. So we did not have time back in it. Why? Because there's no news delivery. So why would price wreck everyone when there's no news? Like, it doesn't make sense. Like, always the same stuff happening. So when we know the move is likely to happen at Thursday, why would we long a M5 confirmation on Tuesday? We would want to see a H1 change in state of delivery like this, and then getting confirmed, and then you want to trade this retest into premium, which unfortunately did not happen. So, but it happened right here. So once that happened, we retest the breaker, we leave a new range, we come back into premium, and then we drop down. But this trade is not high probability in my opinion, because I just explained to you we can frame a trade idea from discount from the H4 range, and the H4 range holds more weight. So all the trades I'm showing right here, they are not high probability, by the way. I will go to the high probability trades in a bit. Well, they are high probability to some models, but not my model, unfortunately. Now, when we disrespect this daily fair value gap for that much, you could be like, okay, it's probably retracing to this daily fair value gap. So I'm gonna just straight to there. So right here, we have so much confirmations. Price just keeps going down, 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 down. And when do we expect the Thursday reversal to happen? On Thursday, because on Thursday there's all the news embargoes. So this trade, it looks quite nice. Why? Because we just have invalidated the first fair value gap. So where are we gonna go to? The second one. Now, why did I not want to invalidate the first fair value gap on the first 2 days? Because we have like, look at this aggressive reaction right here. The only moment that I would like this fair value gap to not be a PDRA for me anymore is if we obviously close through it. And we kept disrespecting it. And then right here, this day we closed through it and went through it. But I don't think, like, checking my phone, my bad. I don't think any trade right on this week was that high probability. Unless you were having bonds confluence for a retracement, but I don't like trading retracements because they usually are low resistance liquidity runs. So this trade right here, you can gamble it, you can do whatever you want. I'm just showing you the trades that would have been taken. Now this one right here, this is a very interesting one because I saw someone in the Discord take this. So why this one is not a good one? If you study price, you will see that Wednesday is not usually. I've seen a lot of Wednesdays just be liquidity generations, and then Thursday when there's news, the real move happens. So if I see this, we have no news back in it. We have a daily fair value gap below it. We have no H1 change in state of delivery. I would not want to risk this. Why? Because if we have no news, I want to see extra confirmation and not an M5 confirmation. Now this right here, this taps a daily fair value gap. We have a balanced price range, break a pattern. You could have taken this. Like it looks nice. I cannot lie. That was a nice trade for the people that caught it. Now this right here, you could use this as mitigation block because there's a lot of trap traders right there. Now let me check. So you see right here, this leg is like this. So this will be like a breaker type beat on here. But I use it as a mitigation block. So this mitigation block should give price a reaction to the upside. So if we saw institutional sponsorship with a unicorn pattern right here, when the kill zone starts, you could have taken this. Like I would say that's a nice trade if you took a loss. But what happens here is there is no unicorn pattern. Why is there no unicorn pattern? Do we close above here? No. Do we close above here? No. Like, so this, because we did not close above here, this is one internal break. And then we finally close above, retrace, and we go. And here we get wrecked. So there was no unicorn, unfortunately, right here. Like if it was like this, high, low, low, high, high, then you could be like, okay, we had the manipulation right here, and then we can go for it. But this, like it's generating a low resistance liquidity run. Oh, what did I? Okay, go back to the M5. Let's see if there's a SMT with a correlating pair. I hate it when I misclick this. There was also no SMT with GUY because this is the high. Let's see, high, low, high, low, low, high, high. So this is also internal. Let me just show you. See, there's no SMT happening. Let's go to DXY. I'm gonna inverse this so it's easier on my eyes. So I want to see this, a unicorn right here. Is there a unicorn right here? There is not. So this trade was low probability. And that's how you prevent losses because you don't validate your trade idea. This is your trade idea. From this breaker, mitigation block, back up, and then we finally target these highs, right? These highs right here. But you don't have any, you have the H1 backing you. Okay, but you don't have M5 confirmation. Sorry, I was just blowing my nose. So you don't have M5 confirmation, so you don't trade it. Easy as. Now right here. Why did I mark this? Maybe because there was an M15 breaker pattern. Yeah, so right here, there's a M15 breaker pattern. See this? We sweep and we close above. So this mitigation block is a breaker type beat. You see, we sweep, place through it. Now, unfortunately, for my Asia model to be valid, I want to see M15 fair value gaps getting created through the breaker, which we did not get, or aka the mitigation block, on the M15, by the way. So this was not a high probability trade in my opinion. If your model does not require you to have a unicorn, then good job for you. Then you could have probably caught this trade. But I need to see an M15 displacement. And beside that, we had news in 10 a.m. So this 10 a.m. news right here, this was a nice trade. But unfortunately, it didn't push through till the day after. Yeah, that's unfortunate that it didn't push through, but we cannot demand perfection from price. That's why when you lose beautiful trades like this, you cannot get upset. So the only high probability trades in my opinion are this one and this one. Why? Because we have a unicorn. Excuse me, I just sneezed. Alhamdulillah. So we have a unicorn at a key level. Here, time is back in it. And right here, we had a offset accumulation. We just swept everyone back out. And you could expect this to be the leg that is going to create this. I want to remove this. The breaker. And I want to show y'all something funny. This high internalized price. And this is, this is very important. This is very important. Listen to me. This is very, 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 very important. Smart money reversal. First stage. That's what I needed to say. And this right here is then the second stage. And the highest probability trades are the second stage trades to the drawn liquidity. And what happened? If the daily fair value gap was our drawn liquidity, look at this second stage, right? Look how fast we go there. Let me close this. See? Second stage reprices there extremely fast in comparison to the first stage. Bro, I need to sniff my nose. Okay, my bad. And that's why that would have been a good trade in my opinion. Like not good, but because it's counter trend, but you could have internalized it like that because this is the second stage. So we are expecting a quick repricement to the drawn liquidity. And that's why this M5 pattern right here did not hold because we had the drawn liquidity to reach. So I hope this video helped y'all because I learned a lot from studying this price action. And this is how you should also study price action every single week. Every single week, you should note what happened, why it happened, etc. Okay, peace.